And now time for a full chart technical analysis with Sensei Crypto, this time Micron Technology, ticker symbol MU. Interesting week in the markets, and I think you'll find this one interesting. And now on with the video.
Thank you, Martin. Yes, let's have a look at Micron Technology's ticker symbol MU. This has been requested by one of our members. If you do want to request a stock review, then please do leave a super chat or a super thanks in the comments. And please do hit the like button if this is your first time on the on the channel if you want to see more content like this. But let's have a look into Micron Technologies. I'm going to look at my short-term, long-term, medium-term targets for this stock. I'm also going to have a quick look at the fundamentals, as it was a very generous super chat. So let's have a look at the stock. And the first thing I look at when I look at this stock is, even without looking at the market cap, I can tell it's a well-established company. Even though it's got these big swings, it is not going down in a straight line. A lot of the stocks we look at these days is people trying to gamble too much on the stock market, but this stock just by itself, it looks like it's looking good by itself. And then I have a quick look at the market cap, and it's 118 billion. So you can see this is a well-established company, Micron Technologies, and I'm sure a lot of you have heard about it. This is alpha spread, the technology we use for the fundamentals. What it's saying is, worst case right now, it's overvalued. The stock should be at 61 USD. The base case, it's saying it's about at value right now. Maybe it should be, maybe it's undervalued a little bit, and it should be at $121, which it was not too long ago, last week or this week. And then you've got the best case, which is saying it should be at $232. So let's see if the technicals match up to that. If we have a quick look at the fundamentals still, you can see the revenue is increasing, the operating income is actually increasing as well. In the future, that's the projections. The cash flow is decreasing, the investing cash flow, so that's good. The assets is 65 billion, the liabilities is 21 billion, so that's obviously great to see the assets are more than the liabilities by a factor of sort of 3x, which is good. And most of it's long-term debt. 13 billion is long-term debt. So it's not going to be affected too much by the current interest rates at the moment. If we look at, we go down, the profitability score is looking okay, not the best, but it's still looking good. And this company is not going anywhere. This is not going to zero. The solvency score is 71. It has nothing wrong with the solvency. So the fundamentals looking good. You can see the targets, the Wall Street targets. One is saying about 7% downside. The rest is much higher. We can see that the targets for the most part are to the upside. Let's now see how that compares to the technicals on the chart. This has it's already done its earnings report. The next one is in 66 days. The earnings, it beat earnings by quite a bit, but wow, by quite a large margin. That the estimate was negative 0.25, the actual was 0.42, so a surprise of 0.67, a surprise of 266%, which is very, very large. So it's had a good earnings. It does pay a dividend of 0.43%. And that the last ex-dividend date was March the 28th. So that's looking good. The year to date is up 78%. The last 3 months is up 24%. So you can see here this must have been caused by the earnings. If we go into the daily chart, you can see we did gap up, and now we're coming back down. So let's go back to weekly and analyze this from the time that this stock came out, and then we can go back into the shorter term. So if we turn this into every single candle represents 1 month, this company has been trading since 1984. You can see that the floor price, we're just going to put a few technical lines in place, a few horizontal lines. So let's make sure that was accurate. Let's zoom in to the base case over there. Yes, very much accurate. We'll put a few horizontal lines from the IPO days. So you can see just straight away how technical analysis works. You can see the high from the IPO correlated to the low of 2011, where it went on that massive bull run. So these technicals really do work. If you could have, just by looking at the technicals, the high of the IPO, that would have been a buy zone. That's at $4. You could have ridden $4 all the way up. It's never come back down at $4 all the way to $106. So that's why I like to put those levels in. Another one of those levels would be the high of 1995. You can see it's a very significant high. And then you can put a high in at the highs is another very big blow off top in the dot-com bubble. And that was around $97. Those are main horizontal points. Let's see, there's a blow off top in 2018 as well. Not as extreme, but it's still fairly significant. And then, of course, we've got the high that we have just created this month at $130 at the all-time highs. And then we have, let's see if there's any trend lines that we can establish. Nothing too extreme, but you can just see that we can have it. We do have a very extreme, a very elevated trend line here to the upside. So we're going to take that into account. And then, is there a channel occurring here? Not really. No, nothing like that. Okay, so now we can move on to we've done the monthly. Let's go to the weekly chart. So yes, this has obviously done well at the earnings. It has gone up a lot, and now it's correcting back down to the downside. It's a very aggressive corrective candle. We are actually down in the last 2 weeks about 20%. I would be getting ready to buy. This is the area I'll be buying at, $97, $95. This is going to be my first buy zone. So I'm going to create a trading position there where my stop loss would be just above these moving averages. These moving averages are starting to correlate with this trend line. So that's 2 reasons to be buying at this level. Again, I don't give financial advice, but when I see a trend line and moving averages coming together, that is an area where I would start being interesting to add to the position. If I'm not in yet and I see this kind of, there's a few different ways. One is I'm DCAing. I like the stock. I've seen it in the last 10 years. I like how it's operating, and I like to DCA, but I don't like to DCA randomly. I like to DCA at points. This would be an area I'll be DCAing. Another reason would be, let's say I've never seen the stock before. I've done a fundamental analysis for myself. I've seen the earnings, and now I'm very interested. The earnings were very good. It's caught my radar. Where do I buy it? Do I buy on the day of earnings? No. Let me be clear-minded. Why I'm going to buy it is an area where it starts to make sense. It's lower risk than buying it randomly, and that will be one area here. Because of the trend line and because of the moving averages, this is an area that you might want to start building a position for the stock, and that will be at $97. I've just seen a super chat from Vaz. Yeah, so $97 would be my first area. Of course, if things turn south, you don't want to be investing all your money at that area. The next area could be this area here. Oh, don't want to do this area here, which would be my next significant level to be investing at $64 to $60. Somewhere around there, you might want to hold some money back just in case we do have a much more significant correction, and that'll be the next real area to be buying. The reason of that is because there's 2 trend lines correlating. One would be that horizontal trend line that dates back to 2018 and 2021 and 2022 and 2023, and also the trend line to the upside, which dates back to 2016, 2020 and 2022.
Vaz donated £4.99 through a super chat. Do you want to tell us about the wedding? What's the plan? Where? Who with? What are you wearing? Etc. etc. Will it be on the extra channel live?
I'll answer that question shortly. This was made during a live stream. I do a live stream every Sunday, so please do come in and ask your questions. But yes, as I was explaining, this is the trend line, and it's correlating. 2 trend lines are coming together, so that'll be my next big area to be buying. So I'll invest here, and I'll definitely leave some money on the side to be buying there. Now, what's my target for the stock? Of course, the stock was in price discovery last week, so we don't have any targets from before, so we can do a Fibonacci from the last high to the last low and start looking at the 1 618, and look at that. This wasn't planned. I've taken the high to the low, and what was the target? The 1618, exactly where we topped out at 129, 130. So that the reason that the stock has come down is because people who are long-term investors who do like the stock have seen the Fibonacci price, and they can clearly see that that was the first area of taking profit. So I wouldn't be surprised as if we do come back down even to 87 cents. So you could be looking at something like that. So that take profit has already been taken. So what's that area net after? Down the line, somewhere 5, 10 years, 3, 4 years, whatever your time horizon is, I think the next take profit on the stock you'll be looking at 3618, the 3618, I think, which would be at around $230. You might be holding for a while, but that's your next real take profit level. So good luck to you all. Those would be my buy-in zones. My short-term target is down a little bit, coming back down to just under $100. My medium-term target is coming back to those levels of $129, and my long-term target is $230 for this stock. I'll pass it back to you, Martyn. Actually, one more thing I wanted to show you guys, sorry, before I pass it back down to the owner of the channel, is the RSI is looking fine. It's in the bullish control zone. Yes, it's calling off, which will be good. It will allow it more levels to rise. And the other thing is the MACD is still green. It's not in the red, so it is still looking good. Even if it comes down a little bit, these indicators will still be looking good. They won't be ticking bearish, and it will allow you to get back to those $130 level relatively quickly, in my opinion, once you start bouncing at around $100. But yes, now I'll pass it back to you, Martyn. Thank you for the opportunity.
Thank you, Sensei. A great job as always. Always great to get your insight on the stocks from a technical chart perspective. For more information, click above my head, down below in the description. Over here and over here, you'll find more information in the series. Until next time, as always, take care of yourselves and each other.